Hi, it's Katie Stock, also known as Car Lady Katie of CarLadyKatie.com. I am an automotive sales professional, and it is my mission on this earth to simplify the car buying process for all. Today, I would like to talk about what I don't understand why I'm not getting XYZ incentive or financing, etc. I have perfect credit. And how it applies when you actually have baby credit, not perfect credit, okay? So a lot of the time, people are looking at the FICO score, right? So that's your credit score. There are three bureaus: TransUnion, Experian, and Equifax. And they all take all of your payment history, mortgages, credit cards, all the information that's been reported to them about your financial history in paying and how consistent you have been in managing your finances, your debt, etc. It tracks your income, address history. It's basically as complete of a financial picture as one can be provided to essentially inform banks how high of a risk you would be to take on if you're loaning, being loaned money, right? Because if you don't pay your bills consistently, you're going to have a lower credit score. If you pay your bills consistently, you're going to have a higher credit score. It makes sense. They're just, it's a compilation of all these data points. So oftentimes we'll have a scenario where someone is a first-time buyer, or they've just, graduated college, and they just don't have a ton of information. But their FICO score, their credit score, will be very high. But you look at the bureau, so you look at that picture, and maybe you only see a single credit card with $1,000 limit that, yes, you've been paying perfectly, but it's a single credit card with $1,000 limit. And you and I are sitting down trying to figure out a way to negotiate on a vehicle that you're trying to borrow for $65,000 plus minus. Okay, that is a big jump for the bank to take on as an assumption of risk and liability. They don't have the data point, so they might have a higher APR, they might not qualify you for certain programming or incentives, and it makes sense, okay? So just because there's this high credit score, just because there's a single number, it's not enough data to really define and inform and say, okay, since you've been responsible with $1,000, you're probably going to be responsible with $65,000. How do you overcome this, though? Because it's kind of like that whole, you can't get a job without experience, but how do you get experience without a job? The key to 95% of the money portion is down payment when it comes to an automotive transaction, right? The bank wants to see that you're invested in this process and invested in this purchase just as much as they are. So they're going to be a lot more amenable to saying, all right, we'll take a chance on you because you're taking a chance on you at the same time by bringing cash to the table. So think of it not as perfect credit just because it's a high score. Perfect credit is 30 years of reliable payment on a mortgage with, massive limits on credit cards and paid auto loans, etc. That's perfect credit. You might just have baby credit with a little bit of great data points. So keep doing what you're doing, but don't be surprised if we need to work together to get just a little bit more of a complete picture to get you to what you want to be, which is on the road, driving around, scooting around town in your brand new vehicle. Happy shopping, good luck, and reach out, heycarlady@gmail.com if you have additional questions that I can help you with.